Meantime, the Dow hitting another record close yesterday. Joining us is Emily Roland, co-chief investment strategist at Hancock Investment Management. And I think we're all wondering, does the train ride continue? Does it pull back? What's going to happen here, Emily?
Yeah, look, Andrew, if you're looking to get tactical into year end, momentum can be a powerful force. And we've got to remember that markets have muscle memory. We have a playbook for this. You look back at 2016, 2017, and post-election, you saw a massive rally in areas like regional banks that could potentially be beneficiaries of deregulation, small cap equities, which would benefit from pro-cyclical policies. We looked back at the 3 months post-election in 16, and regional banks were up about 26%. We're at 19% right now. Small cap equities were up about 15%. We're at 10. So we could be in sort of the sixth or seventh inning of this pro-cyclical trade playing out. The challenge is the fundamentals in those areas of the markets aren't as strong. So we think into 2025, investors refocus on the fundamentals. But for now, momentum can be a powerful force.
So what I'm trying to understand is you think momentum is a powerful force through the end of 25, or through the end of 25 into 25? What are we talking about here?
So we're looking at into 25. So if you look back at the 2016 playbook, you saw the bulk of the returns in these riskier areas of the market happening in the last couple of months into the year, into the early part of 17. And then those trades sort of chopped around and moved sideways from there. So I think you're getting a lot of it now. But again, you could have a few innings left for these plays to work out.
But if you think the chop is on the other side, is there any argument to say to take your winnings now?
I think there certainly could be, depending on how tactical you want to be. You know, you look at, for example, small cap earnings. They're down 7% this quarter versus large cap earnings, which are up 6%. So what you've seen is these moves have been made entirely on multiple expansion. You're also seeing this almost speculative frenzy playing out across lower quality stocks, across crypto and crypto related assets. It's just remarkable to see what's happening here from a sentiment standpoint. So we would suggest trimming into those riskiest parts of the market as we head into next year and refocusing on quality at a reasonable price, places where we're actually seeing the earnings momentum. We have to remember that over time, stock prices follow profits. And I think a lot of investors are maybe ignoring those textbooks right now and focused on where the most speculative action is.
Emily, you mentioned crypto, and that obviously is a speculative asset. We long talked about crypto and the NASDAQ being tied. I don't know if it's tied in the same way. I don't know if you think that which is the dog and which is the tail in this case.
Yeah, typically those two things move together, and we've actually seen crypto-related assets break away in terms of that performance profile. So again, just remarkable moves. Every morning you wake up and crypto's at a new all-time high. It's actually helping mid-cap growth stocks be among the best performers across the broad U.S. market right now. So again, we would fade that. Although we're continuing to emphasize U.S. assets broadly, the dollar's up 7%. This quarter, we're seeing economic growth better on a relative basis in the United States right now. The services side is booming. The consumer is doing well. So we would continue to emphasize U.S. assets in a broader global portfolio. We would just think about sort of pruning risk at the margin. We don't want to be going over our skis here and taking risk as we head into next year.